All right, Gavin Farley here from Novus Capital. I'd like to introduce you to Paul Locke for those who haven't met him. He obviously, you all know, it's been in suspension for some time and is about to come out. We've done a recent raise, and the purpose of this little update is just to give you a flavour of what's to come, what's been, and also to answer any questions you might have. Right, so over to you, Paul.
Yeah, thanks, Gav. And I'm glad to see there's a good turnout today. It's really pleasing. So my name is Paul Locke, and I'm the Managing Director of Pan Asia Metals. So Gavin said that we've been in suspension for a few months. We went into suspension in early Feb. We were talking to a strategic partner. That dragged out a bit, and we are still in talks with actually several strategic partners. But it was taking a bit long, and I know a few of my shareholders were getting very frustrated. So we've worked with Novus to come back on. So what I'd like to do is just jump into a few slides, and I'll race through those. And the idea is just to give you a bit of an idea of my thinking, where we're taking the company, and then we'll jump over to questions. All of these slides are available in our latest presentation releases, and we'll be providing an updated presentation about when we come on. And so some of these slides will be updated. So just the first slide here is on cost curve. And I've got a big focus on cost curve. My view is that we're long-term players, shareholders come in and out, but nevertheless, projects take a long time and you've got to have a long-term view. So our view is that anything we look at, we've got to see some sort of pathway to the bottom third of the cost curve. And if we can't see that, then we feel that we're probably wasting our time and our shareholders' money. So our objective is to identify projects which are in low-cost jurisdictions and which position us for high margin outcomes. And we preferably want projects which are proximal to the next stage of manufacturing. This cost curve here was prepared by Macquarie Bank, and it's actually a bit different from normal cost curves. And what it does is segregate the different sources of lithium into categories. This is rudimentary. Each category of lithium has good and poor performing projects. But in this cost curve, Macquarie have identified South American brine, and this would be largely Chilean brine on Salar de Atacama as the lowest cost source of lithium in the world. And then we've got high-grade lepidolite, which is greater than 0.4%, as the fourth lowest cost, which is quite surprising to a number of people because you generally hear the term grade is king, the mantra grade is king, but that really depends on a lot of other factors. And in this cost curve, integration is key. You've got to have an integrated project. So this line here was the low, which was achieved through December through February. And basically, anything to the left of that line is your project's gross margin. So you can see here that the low-cost projects, and particularly the brine projects, were making very strong gross margins, even in the lowest price environment. And I think what investors should look at is the potential for gross margin. So going forward, even at the bottom of the price cycle, the good projects are still making great money. And that's why we focus on the cost curve. Just going to the lithium environment, and we hear a lot of conjecture about EVs on the nose and consumers moving away. We don't believe this is correct at all. And I've got three charts here. The top left-hand chart is global EV sales, and we can see that these sales are strong and growing, so that the uptrend might be flattening out as EVs start to make or new energy vehicles start to take a bigger position in the market, but it's still very strong growth. And then in the bottom chart, the green one, we can see that the charger network is actually rolling out strongly too. So these are pretty good indicators that the new energy vehicles, so that it includes EVs and hybrids, is a strong market and a growing market. And then this other chart here is China's lithium consumption. It's on a per month basis over the last 3 years. So we're up to April. I'm 1 month behind here. But you can see that very strong growth year on year in lithium consumption. And so that supports the thematic that EV growth is strong. This chart here was prepared as part of our flyer, so some of you may have seen it. It needs to be updated, but the reason I've put it here is to show what we believe is an emerging trend in lithium. And this has been driven by the low prices through December through February. And what you can see here is that the strong projects, so the market leaders at the blue line, have increased substantially since the low at the end of January, early February. But the brine projects have also started increasing in value, and the Chilean brine, the light green chart, is increasing too. But we're seeing the hard rock projects have come off a bit, and I think this chart is actually more exaggerated now. And what it shows us that in a low price environment, it's the low cost projects which win the day, and hence why we focus on the low end of the cost curve. So that's really built into our DNA. If we can't see a pathway to low cost, then we're not there. Just briefly onto the projects. So Tama Atacama, we brought this project in mid-2023. It was a contrarian play. There was a lot of negative talk about Chile at that point. And what it gave us was a pathway to enter into Chile and pick up a lot of highly prospective lithium brine ground for really not much at all. So while the rest of the world was crying Chile's going to nationalize and that's the end of the world, we actually picked up this grouping of properties for less than $1 million. This property, or these groups, there's 6 prospects, stretch over 290 kilometres. There's around 1,600 square kilometres in the holding. 1,200 is under binding option agreement to purchase, and the remainder under MOU and in discussions. The northern part of the project here, so this map's on its side, is the focus area, but all of this sits in the Pampa de Tamarigal Basin and is prospective for lithium brines at depth. You can see this project is 75 kilometres from the city of Iquique in northern Chile, with a population of 200,000. So there's a big workforce here. You can see the port facilities at Iquique. And then throughout the project area, we've got energy infrastructure, good roads, operable rail, and there are actually evaporation projects in the project area, not evaporating for lithium, but evaporation does happen there. One of the keys to this project is its proximity to Antofagasta, and this falls into our objective of projects which are near the second stage of production or a chemical manufacturing area. So in Antofagasta, that's where all the lithium carbonate is produced. And you've got SQM and Albemarle there. You've got Tsingshan and BYD, which have put their hand up to build LFP projects there. And then you've got a lot of interest from other companies which are looking there, particularly the Koreans and BASF. And the reason for this is they recognise that Chile and South America is a very low-cost environment. And in fact, a lot of Argentinian lithium comes out through Antofagasta. So this red line here is a rail line. It's operable and it travels right up through our project. So we can actually rail an intermediate product into Antofagasta. What's key, and some of you may realise that some of the problems with lithium is the waste salt and water table. And so hence the focus on direct lithium extraction or DLE and re-injection. A big part of this project is the advantage is its location. So there's mining all through here, but also we're 75 kilometres from Chile's largest salt mine and largest salt export terminal. So were we to do DLE and then evaporation, which is a common setup, then our waste salt can actually, well, we believe it could be used for export. If we're evaporating to obtain all those other minerals, which has potential, for instance, potassium and boron, then there's pipelines running from the sea up into the lower Andes for copper projects. And it's probable that we could re-inject salt water. Our worst case is we're re-injecting what we pump out if that's required. But this proximity to the coast gives us a lot of advantages which a lot of our peers cannot have. And then I like this chart in particular because it's not one power line, but it's looks like a spaghetti bolognese of power infrastructure all through our project areas, including a substantial amount of solar. And these solar farms are going up all the time. So from a, if we want to go for a neutral or zero carbon perspective, it's highly possible that we can do that based on solar and the grid, which is pumping from hydro as well as other sources. On the RK Lithium project in Thailand, this project is progressing well. Until recently, it consisted of these two prospects. The southern prospect has a resource, so it's lepidolite above 0.4% Lr2O, and most of the circa 15 million tonnes is in measured and indicated. This resource is open along strike and at depth too. 8 kilometres away is the BT lithium prospect with the 16 to 25 million tonne drill supported exploration target. And we'd be looking to receive assays over the next month or so, and that'll position us to produce an MRE there. And then we recently announced the award of the KT lithium prospect licenses 35 k's away. And our field team has been out there doing rock chips. And our last announcement showed this as a very large area. It's 2.4 by 2.4 kilometres in area. We can fit both the RK and BT prospect in the target area, and the grades are looking really good. What's good about this project is we've got a lot of energy infrastructure running by and through the projects, and very solid road infrastructure. So this is a 4-line highway, and we just pull off here to go into the RK project here. So quite exciting. The RK and BT prospects have been designated mining zones, and that's the most important or a critical step to a mining license application. So once you're designated mining zones, it means the government has done a lot of the background work, working with all the stakeholders to categorise this as a mining zone. And then when we submit an ML, we've got a lot of our stakeholders on site already. Key with where we are in Southeast Asia is our proximity to the Thai auto sector. So Thailand is the largest auto producer in Southeast Asia, and now the largest EV and battery producer, and that's rapidly growing. Mercedes EQS EV is produced there, and there are several Chinese companies producing EVs there. So we'd be producing a concentrate here in southern Thailand. At this point, it's trucking it across the peninsula and barging it up into the Eastern Economic Corridor, where all the chemical action is. We've entered into an MOU with a group called IRPC. IRPC and PAM are in negotiations with a third chemical producer with expertise converting lepidolite into lithium chemicals, and they're one of the lowest cost producers. So we've got some visits happening during the month of June, and I'm hoping that we're in a position to come out with some more news post that. The key to IRPC in this MOU is to mine to a concentrate and produce a lithium carbonate, and then our stretch target is to produce a cathode active material if everything's going well. I'm a big believer in creating real options to progress the company, and so this MOU is giving PAM the option to move downstream if it makes sense, but if it doesn't, we won't. Key to IRPC is it's a 45% owned by PTT, which is 51% owned by the Thai government. So we're in good company, and PTT has operating joint ventures with Goshen and CATL and Foxconn producing batteries and EVs. So what I'm going to do is just pop out. Our objective with PAM, and always has been, is to identify low-cost projects which are positioned well. And when we look at low cost, it's not just about grade, it's also about proximity and operating cost environment. A lot of people ask me about operating costs and how we can be so sure. When we look at Southeast Asia is one of the lowest cost operating environments in the world. That's why there's a lot of manufacturing there. That's why the Chinese, Koreans and Japanese do a lot of manufacturing in that region. So Thailand's a low cost operating environment. And then when we look at Chile, with SQM and Albemarle on Salar de Atacama, which is at 2,300 meters altitude, they are the lowest cost producers of lithium in the world. Our Tama Atacama project is much closer to the coast, has all its infrastructure, and is at 1,000 meters, so it's a comfortable operating environment. So we've got all the right boxes, and the idea now is to drill away and identify brines, and that'll get us started on that project. So what I might do, Gav, is hand over the questions.
Okay, so does anybody have any questions? Just raise your hand. Now, while I'm waiting for people to formulate their very gotcha questions, I'll just read out this one from John. How supportive is the Thai government and the regulatory bodies in the lithium production critical minerals business? Is that do they have a special critical minerals bill, or like they do in Australia? Or
they do. They're incredibly supportive. So the first solid indication is the mining zones I pointed out. So those mining zones, the government awards those after doing a fairly comprehensive, a lot of work on the area, a lot of stakeholder work. So that shows support. In early March, I met with the PMO's office, a rep from the PMO's office, and the DG, and they actually gave me an undertaking that they would help PAM progress its projects because they see what PAM's doing as a valuable part of their supply chain. And then IRPC, or its parent PTT, is 51% owned by the government. So the government wants to secure its supply chain. Like most countries around the world, there is a focus on critical minerals and securing the entire supply chain. So there's an incredible amount of support there.
Whilst on that theme, there were some problems, or potential problems, let's say, in the change of government in Chile a few years ago, but they seem to have died down. Can you give us a bit of light on that?
Well, the Boric government was elected on a platform, a social platform, and that was based on social disharmony related to the wealth gap. And the Boric government in April 2023 announced its national lithium strategy. And that's where Boric, it was probably a furphy, talked about lithium nationalisation. I think it was all about the government having more of a role in what's happening with its critical minerals. And this is not new. Canada has taken steps to make sure it's owned by Canadian companies. Australia just recently did that with Rare Earths Company, and the US, of course. That national lithium strategy has gone through a process, and most recently, the government announced the request for information process to allow private companies to explore, develop, and produce lithium chemicals. One of the key outcomes for this, and provided, I think, many people confidence, was the SQM Codelco deal, where SQM and Codelco are going to go into virtually a 50-50 joint venture. SQM is a controlling party until 2031, and Codelco then is the controlling party thereafter. But SQM's share of production, I think, is about what it is now, and Codelco is a contributing party. So that's quite the opposite to a nationalisation, where the government, or Codelco is a government entity, is investing. Further to that, Codelco acquired LPI for $385 million. I do agree it's cheap. LPI is worth more than that, but it wasn't a nationalisation. So the general view is, particularly when you consider the Chilean tenement system or concession system, and exploration and exploitation concessions are actually a property right. Holding concessions there put you in a very strong position. Actually, further to that, I might add too that both Thailand and Chile have free trade agreements with a lot of countries around the world. And so those free trade agreements include investment protection. And that's one thing we like about both countries, is that those FTA protections are pretty important for us.
Okay, a couple more questions. I've got one from Mike Calotti. Out of the 4 projects of Chile, RK, BT, KT, which will be the first to production and when?
Okay, well, we consider RK is one project which includes RK, BT, and KT. So in Thailand, RK is the more progressed. So the objective is to produce a PFS around that project, and that project will draw probably from BT for the back end of the PFS life. So say it's a 10-year project. Our objective with our joint venture parties is to have them come in and as part of the agreement to fund completion of feasibility, given that the partners we're talking to are all processors and have their hands-on operating experience.
So what sort of timeline? I heard the mention of 10 years, but
Oh, no, 10 years. Sorry, 10 years is for a PFS. The PFS, a typical cash flow. So you want minimum 10 years so it's bankable.
yeah.
Sorry, I would expect, depending on our discussions with partners, I would expect that we could complete a PFS easily this year. But that's reliant on what's happening with these partners under MOU.
You have to build. So when would the first revenue come in, do you reckon? After you complete the PFS, you've got to finance the mine and all that sort of stuff, presumably.
Yeah, well, you've got an ML,
yeah,
and then mining license application, or that is your ML, sorry, and then you've got your build. If you say the ML takes 12 months and your build takes, say, 18 months, that can happen in Asia. So it'd be 2.5 years and you should be ramping up to full production.
And Chile, when do you think?
The way we look at Chile is we see it as, because of the nature of the project, it's earlier stage, but it's a complete outlier because it's got so many strategic advantages around it. The surface Lee assays are very high, so that's a good indicator. And that's a sort of project where you could get, given the environment we're in, there's a bit of FOMO on sourcing low-cost lithium. That's where you could get a big party come in with a lump of cash and you could take it through the drilling and feasibility very quickly. So really in timelines, it's all funding dependent. And the way we look at it, it's also potential joint venture partner dependent. So we're not there to spend 15 million bucks to go and get it to feasibility. We're there to position the project to attract one of these parties, which will fund that.
Out of the 4 projects, which would be the first production, do you think?
Oh, well, I would say at this point, RK would be the first production, but the Chilean project would attract a completely different style of joint venture / investor. And that's a sort of project that could move very quickly if the right investor came in.
Just on the Chile thing, and we know you can't, till you've done a PFS, you can't actually say what the cost of production is going to be. But clearly, when you acquire an asset, if you're going with under your theme of being a lowest cost producer, or low on the cost curve, not necessarily the lowest. Why would does that mean that your projects in Chile will be cheaper than the other projects in Chile because of certain elevation or?
Yeah, so, well, there's 2 parts to this answer. The first is the reason we looked at Chile. We believe the lithium market is still a massive growth market. So 2023 LCE consumption was around 1 million to 1.1 million tonnes. It's still forecast to be somewhere between 3 and 4 million tonnes by 2030. That's a massive increase in consumption. So we wanted to be part of that. We see what we're doing in Thailand as low cost, but it's never, I don't believe Thailand will be a 40,000 tonne project. The geology doesn't support that. So we wanted to position the company for scale. And when we looked at the global lithium districts, we had a view that if it's hard rock, it's got to be in a low-cost environment, but no one can really touch the lithium projects on cost. And this is based on what's happening with SQM and Albemarle in Chile. So every time we see a cost curve, we see those big fat bars down on the left-hand side. That's them. So that's what got us to South America. Our view on Argentina is that there's a lot of projects there. There's some good projects there. And for me to say to my investors that we're doing something in Argentina, but we're, at the back of the taxi queue, it'd be hard to justify that. But when we came across Tama Atacama, or what it was before then, we could see a project which had the potential to be very low cost. And the reason we believe that is that it's very close to the coast and it's 1,300 metres lower than Sala de Atacama. All the energy infrastructure's there. Actually, all our infrastructure is nearby. It's a mining district, so mining is well understood. There are evaporation ponds there, so on and so on. So we believe that South America will always be low on the cost curve, and we're seeing that with some of the feasibility studies coming out of the projects, which are, you know, between 3,000 and 4,000 metres. And if they can produce something down at around $5,000 to $6,000 a tonne, and we're right where we are, we believe we should be able to produce something for substantially cheaper. So that's our justification for it.
Okay. Now I've got Patrick Shepherd has put his hand up.
Geez, I feel like I'm in a bloody lecture here, like low end of the cost curve neurology, and that's all fantastic. But realistically, what's going to drive, now that we're sort of getting back onto the boards, some interest? Like it just seems like you've got a lot of ideas of what you want to do, and there's potential and stuff like that. But when are you going to get a resource together? When are we going to see what you've actually done?
Okay, so I suppose, Patrick,
I'm a bit lost at the moment. Like I appreciate that you've got 3 projects going, and I can get that the EV space in Southeast Asia is huge, and that you've got some partners over there. But what do you actually really got?
Yeah. Okay. Well, actually, the way we should look at the portfolio is in Thailand, it's one project, the RK project, with 3 prospects in all at various stages. And then Tama Atacama as the second project. So if we look at the most successful companies in valuation, a reason a lot of that valuation comes in is at some point investors will see that it's positioned for a number of things. One, it's low cost, it's got scale, it's got partners, those sorts of things. So our catalysts will be MOUs and joint venture agreements.
And what sort of dilution would that then cause? What would you have to give up for that sort of partnership?
When we talk about dilution, it's really important, and we can use other companies as examples, is that dilution often means, well, it can mean something good or something bad's happening. So something hasn't worked out, your copper project. So you're trying a gold project, you've got to go and raise new money, and you dilute everyone to do that. So that's, re-establishment dilution. Other dilution is when you're in a growth market and you're bringing in new equity on the back of valuation uplift, on the back of milestones being hit, which is how things traditionally go. But we've been in a pretty average market for the last 12 to 18 months. But the idea is to position the company to deliver on those milestones. We generally get a revaluation, and then when you go and raise new money, you're raising at a higher price. So your current shareholders get the uplift on their share price.
And how far away are you from any of those milestones?
Well, we are always working on these milestones. So in Thailand, where we've got IRPC under MOU, and I have stated publicly that we're in discussions with a potential third party. And the idea with that is that we want to bring in their skills and hopefully their balance sheet, and not diluting our shareholders, but positioning us for a better outcome.
What do they get?
Well, it depends how the joint venture or the venture is structured. So a good example is Greenwing, GW1. I think it was pre-drill, I could be wrong, bought in a partner called Neo. Neo put in $12 million at a premium. That gave Neo offtake, I can't remember what percentage, and gave Greenwing the cash it needed to produce a resource, which it has done now. I'm not sure if they've produced a PFS yet. So there's a whole lot of models out there, and the idea is to set yourself up with a model or a partnership which isn't going to dilute you too much, preferably not at all, for offtake, but also isn't going to handcuff you. So there's plenty of examples of ventures which have been signed where one party's agreed to a price and the price they're getting is way below market. So a good example was Piedmont and I think it was Atlantic, where Atlantic had agreed a offtake for concentrate at a fixed price, and Piedmont was picking it up and making good money on it. So, when you're in these discussions, you're juggling, it's dynamic, you're juggling a few balls, and the idea is to position the company that you're sort of in an advantageous position. Clearly, your other partner wants something. So, you don't get their money or their intellectual property or whatever you're looking at for free.
So in your modelling, you really haven't factored in any sort of time frames as to when you may, get some money coming through an offtake or whatever it be. You just don't have any time frames at this stage.
I know I can't, because the reason I can't is that one is I'd be misleading, and I'm sure misleading you, and the ASX would have something to say about it. But we're always in discussions, and it's sort of a bit of a game, negotiations. You can go and so I call them flag waivers. You can go and sign an MOU, and it's a flag waiver, but at some point it'll catch up with you, or you've got to say, well, it's a waste of time.
Yeah.
And that's the balancing act. My objective is to produce an outcome as fast as possible, because I know most of my investors want that. But I can't put timeframes on this. Negotiations are 2 or 3 party discussions. They're dynamic. They're changing over time. You might see new opportunities come up. The idea is you've got to lock in at some point, but you don't want to lock in too early.
Yeah. So could I just try to sum that all up, and then I'll ask you, then I'll give you a compliment. So you're positioning yourself in Chile as potential for one of the big boys. I believe there's Albemarle and SQM. Obviously, they're producing 80% of the stuff that comes out of there. You're looking at sort of getting one of them guys, or not potentially them, but someone big to come on board as a partner. Is that correct?
Yeah, so when you look at Chile has a free trade agreement with the US. So it's Inflation Reduction Act, IRA compliant. And so the interesting dynamic there is you have a lot of North American companies looking at it, and a lot of Asian, particularly Chinese companies looking at Chile.
Yeah, so they did come out with something recently where they said they're going to ramp up production, or pretty much double what they're doing by 2035.
Yeah, that's right, exactly. So that also sends a strong signal that the government is looking to change quickly. There's a bit of nationalistic pride there. Argentina's doing well. The Chileans don't like that, so they want to do better.
Okay. Congratulations on the ATM. Can you just explain how that actually works?
I can. So when you look at these at-the-money facilities, there's several types, and this is where you've got to be quite careful. So at the really bad end of town, an ATM facility would be one where the provider provides you with cash. Let's just say it's $1 million, and then they'll go into the market and sell your shares to get that cash back. And this facility could have, say, five tranches of $1 million. So, they give you $1 million, they sell your shares, give you another $1 million. And there's quite often all mechanisms, there are mechanisms attached to it, so they can't lose. And they're called the death spirals. So that's what you want to avoid. Yeah. The ATM, the traditional or the North American style ATM is essentially a broker, just like a broker, but if you've got the right conditions, which mean liquidity and so on, they can sell your shares at market as you're trading, and they dribble them out. And the objective is no one knows until you announce it. And so you're in the best case scenario, you don't affect your price. And this is where liquidity is important. and you raise money at the market plus their brokerage. So that's what we've got. There's no guarantee. We might say, look, you can't do it. The liquidity is not there, etc. Or we believe we've got good news coming through. We don't want to use it, or we don't need it because we've raised money elsewhere. The idea of an ATM is to create flexibility. And I mentioned earlier, we're a big believer in options. Everything, so operating options give us the ability to do things, whether it's in our projects or whatever. And then capital options give us flexibility to do things. The ATM gives us flexibility. So if we say we get a run on our share price, the volumes are massive, we could actually raise $1 million in a couple of days without it affecting the market. But you've got to look at it as an option. Right. What we don't want to do is put our company and our shareholders in a position where something like this can be detrimental. So you might, if you look at our capital structure, it's very clean. We're not capped with options. We've gone to particular links to make sure that our capital structures are clean. And we do say to incoming investors, management doesn't have options. We're leading by example, which I think sort of indicates that we are protective of our capital structure and we want the company to grow.
Right, we've got a few more questions lined up here. From Mike Colotti, he's got a couple of questions, some of which I think you might have answered. Out of the 4 projects, how would you rate them in terms of focus? And how will additional funds be spread across the 4 projects?
Right at this point, the majority of funds will focus on the Tama Atacama because we're really waiting for these MOU discussions in Thailand to come through. And a big part of that is securing the other parties' funding and intellectual property, which can accelerate a feasibility at a lower cost. And I'll just break that out a little bit. If I bring in a joint venture party which is processing lepidolite and producing lithium carbonate, and they're the lowest cost producer, their work is worth far more to me than a third party engineering firm who hasn't built a lepidolite processing facility before. And because they're doing it, it'll probably be a lot cheaper. Hence, that's why I'm doing it. Most of our focus is on Tama Atacama because that has the potential to really make Pan Asia something. So if we look at our peer companies and their valuations, it wouldn't take much to position Pan very well. I mentioned when we purchased that project, we bought it when I said it was a contrarian move, it was a strategic move. We paid less than $1 million for the project area. Late last year, Eramet, a French mining company, paid Aussie dollar equivalent $150 million for some project areas we wouldn't look at. And then we had the LPI deal. So we've already created value for the company. We're just waiting for the market to realise it.
Why has the raise taken so long?
I think it's to do with Novus.
That's right, yeah.
So we started working with Novus in mid-April. I think we pulled everything together by the end of April, and we did our raise early May and completed on the 14th of May. The ASX has confirmed that we've passed the listings committee, and then we're just crossing the T's and dotting the I's for reinstatement. So we're going through that.
So you expect to be back on the boards in the next few days with this stuff, but you passed the main hurdle with the ASX. That's the main thing.
Yeah, so the listing committee has actually said yes, they've approved reinstatement. And then the ASX asks just a set of questions. It's around cover. So they look at what we've raised, what they work off our March quarterly and what our burn rate is, and do we meet our cover requirements, etc. So, and then there's some operational things. We have to write up what we're doing. They need to be satisfied there's been no material changes from what we were doing before, and so on. So this process is pretty close to concluded. We have, I mean, the ASX just has to go through its processes. We have no control over it whatsoever, other than responding in a timely manner.
Well, it's our experience with other companies dealing with the ASX at the moment seems to be a significant backlog. They're rather slow at doing things that take normally a week. They're taking 2 to 3 weeks at the moment, but so I don't know.
Yeah.
What's your take on the general support for lithium companies, bearing in mind some of the press seem to be overjoyed that there's certain slowdown in EV sales, albeit the facts are that there's still year-on-year growth, a significant year-on-year growth. It's just not quite as high as it was in last year.
Yeah, well, I suppose any other sector with that growth, then that'd be good. I do look at the commentary on lithium, and it does bemuse me a little that you've got these lower cost brine producers with fantastic gross margins, which would put most industries to shame and most mining operations. So I think our view is that there is a strong trend in EV uptake, and the statistics support that. And to reach what companies want to reach by 2030, a lot of lithium is required. But on top of that, I always take the view, and this is why we focus on the cost curve, is that even in a balanced market, and you come out with a low-cost project, it could be an iron ore or anything, copper. If you're down in the bottom third of the cost curve, you'll get banked, and you just push the high-cost producer off the right-hand side of the cost curve. Exactly the same in lithium. There is a ecosystem of lithium producers with a full range of low-cost production through to high-cost production. If we're somewhere at the lower end of the cost curve, and we're strategically well positioned, well, all we're going to do is in a balanced market is push them off the right end of the cost curve. Otherwise, in a growth market, we contribute to the extension of the cost curve to meet demand.
I don't know if this is BHP asking this question or not, but there's a question that's come through from Anonymous. Would you consider a takeover bid?
I told them not to ask that question. Look, we, of course, Pam would consider anything if it's going to produce a good outcome for our shareholders. It'd have to be pretty good because I think we're very undervalued at the moment. But yeah, so of course.
I understand you weren't suspended, you went into suspension voluntarily to give yourself cover to negotiate the transactions in Thailand, which are still going on. And I think you were up there last week. Somebody has asked, how do we know you won't go into suspension again? I don't know any company could answer that with any clarity, but
yes, that's a fair question. But my honest answer is after being in suspension, so we went into suspension. We're of the view the other company basically stated they were ready to go and then just dragged everything out. I would be very careful about making that choice again. It's actually quite grueling. So,
in other words, what you're saying is that when you went into suspension, you thought it was just for a few weeks to get the paperwork done. And
a few days.
A few days, yeah.
Right. Yeah.
Okay.
Yeah, no. So I personally have no plans to go into suspension again, and in fact, I would take all moves to avoid it.
One question: would you be normally planning to offer the existing shareholders the ability to participate? So in other words, have an SPP or a rights issue or something like that? Is that on the cards?
We could do that. It'd have to be, in the future and not at the moment. The problem with an SPP while you're in suspension is that it's a long process. suspension is not a good environment to raise.
So you didn't do it this time, is that?
Yeah.
But in normal course of events, you won't be suspended.
Of course. So what we've found, we've actually generally raised all the way through to the end of last year. We've always raised at around par, and we believe our assets deserve that. And then with the rout in the lithium market in particular, it became very hard to raise on reasonable terms. And then the suspension is just not the right environment for that. But I mean, investors have got my contact details, and I'm very open to discussing any questions within reason. If I get enough inquiries that they would like to see an SPP, if and when we raise again, then we would do that.
So, Paul, you said there'd be a full-blown presentation being released to the market in the next few days or something like that. Is that what you said?
I will update the presentation, so it'll have the change capital structure. We'll have some more information on our projects, particularly what's been happening at KT, which is pretty exciting,
Right.
and so on. Yeah.
Okay, well, but thanks very much for everybody for dialing in, and hopefully you got your questions answered and have been encouraged by what you've heard. So thanks very much. We'll see you next time.
Okay. Thanks, Gavin. And thanks everyone for watching. I really appreciate your time.